Aussie dollar. This is a daily chart, and I'm going to cover the SMT divergence. Specifically, this teaching is only on the USDX SMT divergence. There's many different concepts for SMT that I teach, but just to keep things simple and easy to understand, one of the most powerful ones that I use is the relationship between the dollar index itself versus foreign currency pairs. All right, so we're going to take a look at the Aussie daily, and we're going to highlight this little area right in here. Okay, and what went on before the big move up. Now I'm going to cover some things that you've already been exposed to, so you can see how things start to more or less dovetail together, and it helps you give you a better understanding of what price action should do in the coming sessions and days. The SMT divergence, or SMT smart money technique, is something I've discovered by studying relationships between correlated assets and correlated markets, and I actually developed it in the understanding between the commodity markets. When I was a commodity futures trader before FX, I would look at the grain markets, and I would look at the currency markets, and I would look at the bond markets, the 10-year, 5-year, and 30-year notes respectively, and I would compare their price action with one another. And I started seeing a setup that would always be there when significant price moves would occur. And I think that if we were in a room together and I asked everyone by raising their hand if they felt this move here on the Aussie dollar was significant and a worthwhile study in terms of what made this price action movement, I think everyone would raise their hand, or at least the majority of them in the room would raise their hand and agree that this was a significant price move. This is a daily chart, so it's over 150 pips, so it's respectable. So I want to go in and do some breakdown on this low in here and show you some of the things that takes place and how also you can use the SMT divergence for bullish scenarios, and that's what we're going to cover now. Okay, so I have a crude diagram up here, and this is going to more or less help me illustrate what it is that makes an SMT divergence.
Hello traders, welcome to the first video. I'm going to upload this on my channel for the first time. So today's subject is about the trading prop firm Hydro Trader. I'm going to put this on 40. We're going to talk about, is hydro trading easy to use? Why should I buy prop firm from them? And is it legit or not? And the things we can talk about hydro trader here is that it's well rated by traders. Also, it's so legit. It's not like other prop firms. We can talk about them, but let's not. Okay. In this prop firm, you can buy like a lot of funded challenges. It can go up to 100k funded challenge. Also, the payout is very, very good. It's like 19%, so you can't find it anywhere. Also, there's no risks. There's no risks included. So their prices actually is good for a 90% profit share for the 5k funded account. You can get it for you can get it for $89. You can find prop firms that are cheaper, but with Hydro Trader is more legit for buying prop firms. So I advise you to buy from them. Also, there isn't only 5k funded challenge. There is also 25k, 50k, yeah, and 100k.
And for the sake of this specific bullish scenario, we're going to refer to the blue line up here. Okay, that's going to represent the Aussie dollar. And the red line is going to represent the dollar index. Okay, so in a symmetrical market where everything is as it should be, when the market creates a lower low, for instance, in the Aussie dollar, the dollar index should make a comparable higher high. So while the foreign currency makes a lower low, it should be reasonably expected to see the dollar index make a higher high. This is referred to as a symmetrical market. Sometimes you will see the market create this. The market will fail to make a higher high at the time when the foreign currency makes a lower low. So if the dollar index fails to make a higher high at the same time that the Aussie dollar makes a lower low, this is a cracking correlation. So that means there's something going on underlying behind the price action that's showing heavy distribution in the dollar index because it's failing to make a higher high when it should reasonably do so if this is a lower low in Aussie. Conversely, another scenario might be this, and it would mean the same thing. Okay, so what I'm giving you two examples here that would give you the same analysis, that being there's a cracking correlation. Okay, so now we have the dollar index making a higher high, but now in this case, if this was representing the Aussie dollar is failing to make a lower low. So this is suggesting that Aussie dollar is being bought up because it's failing to make a lower low. Otherwise, it should have made a lower low as the dollar index made a higher high. So when we're looking at SMT, what we're doing is we're looking at exactly the same time frame at exactly the same reference points or candles. Either one of these scenarios means the same thing. What we just shown was earlier, the dollar index was failing to make a higher high while the Aussie dollar made a lower low. That is weakness on the part of dollar, so that would be bullish for Aussie dollar. Here we see the dollar index making a higher high and the Aussie dollar failing to make a lower low. That still is bullish for Aussie dollar. Okay, it takes just this relationship to be present in price action for you to see when there will be most likely a turning point, or in this case, accumulation in Aussie dollar. So we're going to go into this idea, and I'm going to show you how we can take this information
can for